right into the presentation, because what you guys really care about is not what my past is, but how am I going to put money into your pocket? And so if I'm billing at $300 an hour, I want my clients to get more than $300 an hour worth of value out of this. And so I've got to figure out a way, because I can't see you guys. I don't know how you're interacting, whether you're paying attention, but I need to make sure that you understand I am going to put money in your pocket over the next 40 minutes. That is my entire goal. And you guys being wealthy, you guys succeeding, and you guys being rich is actually what the tax code encourages you to do. And it's what we want to see you do. And so I've got to approach this conversation like I'm talking to my family members, somebody I really care about, even though I may not know some of you. So this is why everybody loves talking to me, because we're going to actually talk about money. And most people think that talking about money is like taboo. They'd rather talk about politics, sex, or religion. And many of you have questions that you're afraid to ask, but you know you want to ask. So this presentation is, I'm not going to be your moral compass. We're going to kind of go off on some fringes so that you can make your own decisions that's applicable and right for you. But with that said, the attorneys kind of make me put a disclaimer here, which is I'm giving general advice. I'm not giving one-on-one consultation to any of you through this presentation. It's meant for educational purposes so that you can take this information and talk with your own advisors about it and see how that this is most applicable to you and how to move it forward. And so we're going to start off saying that I don't think anybody here likes paying taxes. I just really don't think anybody digs it. But let me ask a quick question. How many of you would be upset if you had $1 million tax bill? All right, so if there's a little, hey, hit a chat button or a thumbs up for those of you that know how to like it, on the Zoom for those that are a little, overly zoomed, know how to do everything on it. Now, none of you are saying this is like, I don't want to pay $1 million. That would suck. All right, you failed to realize that the only way you're paying $1 million worth of taxes is you made a ton of money. And we have this disconnect between taxes is actually part of the success process. And it's a bill that we have to pay, and it's just a cost of doing business. But if I have to pay $1 million in taxes, hey man, I'm crushing it. Now, I don't want to pay a penny more than I legally need to, but we need to understand just how big the tax bill is in our life. So basically, being a California resident, your state and local taxes and your federal taxes contribute more to your total expenditure than your housing, your clothing, and your food combined. All right, so when we talk about how are we going to budget, how are we going to accumulate wealth, how are we going to move in a correct direction, controlling our tax bill is actually the strongest, easiest, best way, and all of us enjoy paying less in taxes legally than we need to. So we're going to cover some of those topics a little bit later today and some other things that I think it's important that you know about in this environment over the next week, 2 weeks, and over kind of the next couple months. But some of the stuff just carries on forever. So that's cool. We're going to put money in your pocket. Now, the map of the US is basically saying you guys are still working for your tax bill. You have until April 30th before you've paid your entire taxes for the current year. And I know that that's exciting some of you, and you just really love paying that tax bill. And you're like, forget this. I really want to just figure out the tax deductions. So let's explain how the tax code works. And so the IRS has this really cool group that's called the Taxpayer Advocate Service that's supposed to be our voice within the IRS. And so this is their flow chart on how they say the tax return process works. And this is the entire flow of how the IRS system works. So that top left section was this previous slide. This is all the inner workings that happen behind the scene. So if this doesn't look crystal clear over to you, let's just say there's a big plan that the IRS has and a lot of intricacies to it. It's not the easiest thing, but there's a roadmap, there's success clues that they leave behind, and we want to pick those up and take advantage of them, because as a real estate agent and as a real estate professional, you can do some really, really, really cool stuff in the tax code. But all of this other stuff that you're seeing on here, this is where the IRS is saying You know what? We love real estate agents because they have big loopholes, but we really love real estate agents because a lot of times they don't have good accounting records. They don't keep track of stuff. And many times they didn't set money aside to really pay for their tax bills. So a lot of times they're a high audit group. And usually what the IRS does is they wait for a market decline to come back and audit you after your booming times in the real estate industry. So for those of you who have been in for a while, if you remember 2004, 5, 6, 7, and then you remember 8, 9, 10, and folks were being audited in 8, 9, 10 for those earlier years. So it was kind of like ripping off your fingernails, dipping them in alcohol, and having a wonderful visit from your uncle. So we're going to approach taxes not like your cousin's friend's best dog's babysitter who says that they can write something off, because we can do anything until we get caught is not the way to approach taxes. We actually want to know what we can do, what we can't do, and then legally use the system to put money in our pocket. And so there's actually a very, very famous Supreme Court justice who ruled on a tax case and said that basically taxpayers have no reason to pay more than they legally need to, and they really should take advantage of every opportunity that exists in the tax code to pay less taxes. So that's what we're going to do. But before we get into it, some of you have heard, oops, wrong direction. Some of you have heard about this wonderful thing called the PPP. Some of you have actually submitted an application for it last year. Some of you did not. Some of you have submitted an application for PPP round 2. Interesting fact is it has been extended so that you can submit an application for PPP 1 if you've never claimed one or never submitted an application. Or if you submitted an application previously, you can apply for a PPP round 2 if you can show that you had a 25% decline in revenue year over year in a quarter. Now, the application process has been extended through May 31st. Just got an email this morning that the funds are beginning to run dry. So if you have not thought about the PPP, I want you to seriously consider it. You may think that you don't need it, or that your business has boomed, or that you've been A-okay, or that you've made things adapt and work to it. My personal belief is that the reason why the government is wanting to put the money into the hand of the business owners is they know that you're going to reinvest it into the business. And the more that we can take money and move it through the economy and the cycle, is that's going to create value. And so it's called currency for a reason. And so if I leave the light switch off, we're not getting the value of the electricity. But if I take that money, stimulate your business, you make smart business decisions, or you start investing in certain ways of doing your business that you otherwise have been afraid of doing in the past, this allows your business to grow faster, better, stronger. And the ability to get forgiveness is much easier than it was when the PPP first came out. So talk with your bank, the one that you currently bank with first, to see if they can do the PPP. Submit the application and understand things like payroll will work. If you're an unincorporated business, that means you're a sole proprietor. Realty One gave you a 1099 last year. All right, you're allowed to use the gross income now for your PPP loan. It used to be it was your net income after the expenses. So this basically means, let's say you had $100,000 worth of commissions last year, but you had $90,000 worth of expenses. So before, you used to only qualify for about 2 or 3 grand under the PPP. We're now talking you're qualified for about 25, 30,000 with the PPP using that gross number. Take a look at it, fill it out. We're not saying do it or don't do it, but just understand that this program ends soon. And I would rather you make the decision on what to do with the PPP with the money in your bank account, and then decide whether you need it or don't need it, or whether you're going to return it, or whether you qualify for the forgiveness afterwards, rather than not take it at all, right? Because again, you may be okay now. We don't know everything that's going to happen over with COVID, but there's money in this program, and we know that if this helps your business succeed and grow, we want to take advantage of it. All right. So for those of you who have not done the PPP, I've probably put in more than $300 in your pocket just by doing that. For those of you that do have the PPP.
So Sean,
yep.
So let me ask you a question. So let's say I'm a brand new agent. I just started in 2020. Is there a preference, or which PPP should I apply for, the 1 or the 2?
Okay, as
or does it
long
not?
as you were in business before February 15th, 2020, and you can have some type of proof, your real estate license, because that, got approved by the state, so you can show that you were in business, a bank statement showing that you were in business, by that February 2020 date, and you have the 1099 for the year. You may not have filed your tax return yet, but you have that 1099, which you got at the end of January. You would qualify for PPP 1. So anybody who has not gotten a loan, you only qualify for PPP 1. If you've previously gotten a PPP, you qualify for PPP 2, potentially. You have to show a decline in revenue year over year in a single quarter. Now, as far as getting the expenses or the waiver or getting the stuff, the PPP, so you don't have to repay it, things like, your compensation to yourself, wages that you pay others, a certain amount of other costs all count towards that forgiveness. But if the total PPP is under 150,000, it's only an attestation that you say, yep, I paid everything that I was supposed to, and you get it forgiven. However, we want to make sure we dot our I's, cross our T's. We're going to submit the request. We're going to basically create an open in case of audit file if the SBA comes back and wants to see, hey, prove how you paid all of these expenses. Obviously, compensation is going to be the easiest one to do. So for those of you that have children, you may want to put your kids on payroll as part of it. For those of you that has a spouse that may not work outside of the home, you can put your spouse on payroll, and that's qualified wages for getting the PPP, paid off or, eligible for forgiveness. Obviously, your own compensation. So if you're an S corporation, you could adjust your wages so that you meet the PPP forgiveness with the wages, as long as you're not paying yourself more than an annualized $100,000 a year. There's a ton with the PPP, and I can't cover everything in the short 40 minutes that I have here, but just understand, make sure if you do the PPP that you fill out this application for forgiveness, because it's non-taxable to the feds. So if you got a 30,000 PPP, you don't have to repay it to the feds if you ask for the forgiveness, and you're not taxed on it to the feds. But California is taxing it as of right now. There's a bill and there's legislation that we're hoping gets passed that will make it non-taxable to California. But right now, California is taxing the PPP proceeds. So just something that exists out there. There's also another thing that's called the EIDL. And this gave two parts. One was a grant that was basically $1,000 per employee that you had for the company. The other is a loan. And the loan is a 30-year term at 3.75%. And it has to be used for business expenses like working capital. Now, the reason why we suggest taking a look over at the EIDL is the fact that this is the cheapest business financing that you will ever get in the universe. It's unheard of. 30 years at 3.75%. That's like a mortgage. I mean, it's just cheap money. It's unsecured. And if it's under now $200,000, there's no personal guarantee associated with it at all. It's just the business assets are pledged against the loan. That's a fancy accountant way of saying, hey, if you mess it up, all right, you're going to have a little bit of a ding on the credit report, but they can't take your house. They can't come after you for personal things. They can't do anything else. So there's an ability to kind of get the cheapest business financing that you ever can get. Now, there are rules related to what you can use the EIDL for, but wherever the rules are, there's exceptions over to the rules. And we can figure out a way, and you can document it in a way such that you can probably accomplish some goals that you want to have if you document things the correct way. So you're not allowed to use the loan to pay off your student loans or other high debt credit cards or other items like that. But if you dot your I's, cross your T's, show how it's used for something, you can do a roundabout way to accomplish that exact same goal. But again, we have to document, show the purpose and how it's really used for the business expansion and the business working capital. But phenomenal program, and it has deferred payments. So you don't even have to make payments for a little while. I am being recorded on this, so I hate saying this out loud, but this is where you want like the 96-year-old realtor to get the EIDL loan that's going to be pledged against the business assets that's only him. So when they die, it's it doesn't have to be paid back. But we'll strike that out in the recorded video, later on. But just understand what's going on. So since you guys I'm treating you like family, and you guys are really wanting to know what's in my head instead of the, hey, here's the nice thing and what I have to say to everybody out there. Many of you have questions about unemployment and a thing called the pandemic, the PUA. So you don't need to know what the PUA is. You just need to know, can I qualify for this, and what do I need to do? So as self-employed individuals in California, if you got a 1099 from Realty One and you're a Schedule C filer, again, I'm not expecting you to read this. I'm just giving the link and the source. But what it really says is this cool little language. I hate reading slides, but I'm gonna have to do it on this one. If you only received a 1099 form last year, you are most likely eligible for PUA. This is $300 a week. All right, $300 a week program. You didn't have to pay into the Unemployment Association or the EDD, unlike a corporation or as a business. But this is, if you meet certain requirements, I think it's 84 weeks, George /on2. It's a long period of time. And basically you just have to show that, hey, I was impacted, by, COVID. And so it's one of these things is, well, what is customary, what's usual services? There's not definitions in here. So again, I'm not being your moral compass, but is it something that you should look at? I would definitely take a look at it, and I think you should apply your own circumstances to it, but understand that this is an incentive for the self-employed to have a little bit of a breather room so that they can get through the cycle, because they know that the business was upended, modified, and tweaked. So if you're self-employed, like let's say you're an S corporation, not just a sole proprietor, is this something that you can do as well? And the answer is yes, but understand that there's just paperwork you need to fill out. You need to look at it. But if $300, a week while we're going through the COVID and going through the cycle is potentially a good thing for you and your household, this is what I would consider low-hanging fruit. So for many of you, I've now taken $300 and I have inserted it into the machine, and I have helped you out while you're moving forward with the business. So again, the language is, I am self-employed, including an independent contractor and gig worker, and experience a significant reduction of my customer or usual services because of COVID-19 public health emergency. I think it's fair to say every single one of you are doing business way different now than you were doing a year ago. And so I would consider that a significant reduction of your customer or usual services. So again, the S corporations, that completely counts and it is allowed. Now, some of you already knew about this and claimed unemployment last year when it first came out, when it was more like $600, a week, which is the first PUA. So one of the cool things, well, let me rephrase the word cool things. The IRS changed the rules on us during the middle of tax season. So that's like having, a seller change the price during like the day before you go to closing, on a property, and all of a sudden everything's different and you've got to redo all the paperwork, and that sucks. So the IRS came during the middle of tax season and basically said, well, it's Congress, and they said, we're not going to tax $10,200 of unemployment that was paid last year. And some folks had already filed the returns. Some folks had not filed the returns, but we had this big change where if you had unemployment of $10,200 last year, you no longer are paying, well, you potentially are no longer paying any income tax, on that amount if your adjusted gross income is below $150,000 if you're married in California. Now, the other thing is California is what's called a community property state. So let's say you are married and your spouse has a regular W-2 job. You're the only one who collected unemployment, and you got $25,000 worth of unemployment. Because we're a community property state, the Calhoun versus Commissioner case allows us to actually take $10,200 for yourself and $10,200 for your spouse, for a total of $20,400 of that unemployment is non-taxable. Now, this is an adjustment that we have to do for the software. So most folks are not aware that you can get this additional amount in a community property state. Most software is only taking the $10,200 against the person, the taxpayer or the spouse, and they're not figuring this community property allocation out. Now, because it's based on our adjusted gross income, let's say you're at 180,000, you're just over the threshold, so your unemployment's being taxed, you missed the threshold. Well, if you have a solo 401k or if you have a SEP plan and you make those additional contributions, so you get the tax deduction for last year, now all of a sudden that unemployment is not taxable. And at a 24% bracket, that doesn't have to be paid on 10,000 bucks. That's like $2,400 in your pocket. So for those of you that had unemployment and have filed or have not filed your return, and definitely those that had unemployment and that are married, pay attention to this, because this is real money in your pocket that you just need to pay attention to when you're doing the software or when you're talking with your CPA about completing your tax return. Cool stuff here. Definitely pay attention, to this. The next is they also changed the deadlines on us this year. So instead of April 15th being the deadline, April 15th still the deadline for first quarter estimated taxes for 2021, but the actual tax return is not due till May 17th of 21. So what we're telling clients is, don't make your first quarter estimated payment with, by 4/15/2021 for 21. Just make an extension payment on May 17th. You're going to take the overpayment when you do file your return and apply it back to the first quarter estimate for 2021, because anything that's overpaid from the prior year is deemed paid as a first quarter estimate for the following year. So we have another month to see if we get guidance from California on if that PPP is taxable. It gives you a little bit more time to get another closing or two underneath your belt so that you can fund that solo 401k or that SEP plan, or that you can do the things that you need to minimize your tax bill along the way. I'm going with the stereotype that the summer months is the moving season, and that's when things are really going to heat up, and most of you guys are just going to knock it out of the park with your commissions. So this leaves us over to some cool intersections of tax planning and opportunities as they present themselves.
And Sean, if I may interject here, so it seems like there was a question about the PUA and how long you can get it for. So it's the $300 a week, and the last cutoff is September 4th, 2021. So yes, you can apply for those benefits this year as well.
And they're eligible, I think, for up to 84 weeks after they are applied, after you get approved for it.
Correct.
So you can do the math better than me. 84 times 300 is more than 300. So it's probably worth an hour of your time to take a look at it, see if it's worthwhile for you to do. But if we're on a slide that says Opportunity Street, take a look over it, self-employed. It's something to really, really take a look at. So the tax planning side is, again, we don't want to pay more in taxes than we legally need to. And I've said, well, here's what we could do with retirement plans, fund the retirement accounts. Well, they gave us a new loophole that I'm allowed to take out $100,000 from my retirement plan, or 100% of the account value. So if I've got an old IRA, I would lump it up to a solo 401k so I can put a loan provision on it and not pay any tax on it, but I have that money to do whatever I want with it. So let's say I am wanting to buy my first house and I'm a sole proprietor and I killed it the first year and I'm able to put away, $25,000 into this solo 401k or the SEP. You fund the SEP, convert it over to a solo 401k, so I got the loan provision on it. I get the tax deduction for funding it, but then I pull the money out and I use it as a down payment on my primary residence. And because it's your own 401k plan, if you have no incidents in ownership for the 2 years prior to this, you can actually have a 30-year loan where you're paying yourself back for your own 401k. Poof, you've got the down payment for your home and you're able to move forward. Or because I believe that you as realtors, you see the deal of the decade every single week. And you can get stuff that my investor clients and myself only could dream about, and your leftover crumbs are my steak dinner. Is this allows you, if you're not comfortable with money over into the stock market, is that you could pull those funds out in a loan fashion so there's no tax consequence, and you could use this to do your own investing in real estate, whether it's local or whether it's out of market yourself. But I can get a tax deduction and I can use the funds for what I want. Cool deal. But now it's still even better if we just pay less in taxes. So for those of you that are married, and if you have a spouse that does not work outside of the home, putting your spouse on payroll can many times provide you a significant tax advantage because of certain employee benefits that you can provide to your spouse, your health insurance. So it is now no longer subject to self-employment tax as it is when it's just you on there. You can put your kids on payroll if the kids are 7 and older. And if you're unincorporated and the kids are 17 and under, there's no payroll taxes with it. So for those of you that have teenage kids, I hate to be this way, but they look at you like you're an ATM. So if instead of them coming up and saying, hey, I need 20 bucks, is you go, all right, they did work for me and I'm giving them money and they have money in their bank account. And when it comes time for them to buy clothes, they're using their own money to buy clothes that they earned from working in your business. That's now a tax deduction. They can earn $12,000 a year, put some of that money into their own Roth IRA, which now can be used for their college, or it just allows them to grow for their own future. But you got a tax deduction for doing something that you were going to do anyway. So the 4 questions I always have people ask is, how do you get paid to do what you want to do? If you can't get paid to do it, how do you get it for free? If you can't get it for free, how do you make it a tax deduction? If you can't make it a tax deduction, how do you get it for less expensive? So the question is, why do I have roses in the background on this slide today? I could easily have just taken a picture of roses and put it up as a slide, but it would not drive home the point the same way. So for the ordinary and necessary business purpose of emphasizing what is a tax deduction is I believe that the IRS tax code is like a bouquet of roses. Most people only see the thorns, but it's actually really beautiful when you know how to use it. Now, after I'm done with this presentation, some of you are going to start groaning, just going, well, what's he going to do with the flowers? Well, I have to take them home and throw them away. Now, my wife really doesn't care about me bringing home flowers. She's just going to say, it's like, oh, you gave another presentation again today, bucko. So I get no brownie points at home for this. But if you really liked flowers, and let's say you were doing an open house, you put them in on Saturday, they're there on Sunday, you go pick them back up Sunday night, and then you get the rest of the week over at your house, but you're just adding that little touch. That's now a tax deduction because the purpose of why you did something was business related. So I want you to be creative here, but I mean, really, really creative. But your cat is not pest control and your dog is not security expense. But you're getting the idea of what I want you to think about. What was necessary? What was ordinary for business? How can I write this off? So if you ask George, you ask me, can I write this off? And we say no, your follow-up question is, well, how could I write this off? All right, so as real estate agents, there's a lot of creativity that we can get away with if we show a documented plan and purpose and move forward with it. Now, another question that folks will ask is, I'm sole proprietor. When do I become a corporation? We have a longer class where we really talk about that at a different time, but if you're a sole proprietor, you have a 5 times greater likelihood of being audited by the IRS. So they really, really dig you. And if your gross income is $100,000 or more, they dig you even more. So let's just say that some folks begin to become incorporated because they've established themselves in the industry. They know it's what they love, what they're going to want to do long term. They're reducing their audit risk, but they are also taking advantage of some loopholes to minimize their timing of when they pay taxes and the overall tax bill that they're going to be paying. Now, the coolest thing about real estate agents is not just that you're business owners and you can write off some expenses, but because you qualify for the section under the tax code that's called real estate professional status. So catch me on this. If you're paying income taxes and you are a real estate professional, you do not own enough real estate. I cannot make that more clear. If you are a real estate professional and you are paying income taxes, you just don't own enough real estate. That is how big this loophole is. It is insane. There's this little thing called cost segregation studies that are allowed to be done on residential. There's a website called kbkg.com that has a residential cost segregator. It's only a couple $100. This allows me to aggressively depreciate a property when it's first put into service. So I could have something that's cash flow positive, but income tax negative, which then offsets your commissions over from the real estate sales that you have while you're funding funneling money over to your retirement plan to get further tax deductions while you still have use of the funds to grow your real estate portfolio. And this is something that's interesting to me. Question, pop quiz, see if you're paying attention and who can answer this correctly. If I have a house and it goes up in value and I refinance it and take cash out, is that a taxable event? And the answer is no. The answer is no, and most people do not understand that. So you can accumulate wealth, go to the bank, refinance, take the cash out, have no tax bill, the cycle builds again, and you can develop a phenomenal portfolio. And many of you understand the concept of a 1031 exchange, and we can use that technique to no longer pay taxes on our gains when we decide to sell a property that's been improved, go pick up another beater, use your connections and the people that you know to add value, add equity into the property. Cool thing. The other one that I love is just the 121 exclusion. As long as you live in a house for 2 out of the last 5, you're allowed to exclude up to $500,000 worth of gain if you're married, $250,000 if you're an individual. So for my single folks out there, buy a house, live in it for 2 years and sell it. If the market declines, just live there longer. You know, if you're okay with moving, it's an easy way to put tax-free money into your pocket, and you guys can see deals that just I dream about. So easy way to take advantage, just become your best client by taking advantage.
So Sean,
go for it, George.
Yeah, before the 8 ball. So, you know, the kids part got me a little bit excited over here too as well. So imagine if I'm a parent, you know, the kids already eat my food, I buy clothes for them. Can I literally just say, you know, can I just put money in their bank account and say I've paid them? Or is there something else I need to do to truly say that I've paid my kid and I've hired my kids?
We want to dot our I's and cross our T's. And plain and simple, if you have a child, they're better at social media and anything related to the internet than you are. And if they're not doing something to help you over with the internet, then you could easily train them to do it, and they could be incredibly valuable to you and helping with it. And many times the parents are taking the kids over to the open house to, you know, clean it up, you know, get things ready, and then the kids go off and do something else. Or the kids help them with work projects at the home office, or they're doing something along the way. But if we can teach kids work equals money, and that it's correlated versus mom is money or dad is money, we're teaching them a value. Now, you can give them a salary dollar amount, just as long as you explain, here's the job that you do, and you make it look like payroll and make it feel like payroll. They either track their hours, or you track their job, or you're doing it. But most folks just put them on an automatic payroll. So let's say it's $500 a month or $1,000 a month, and they have a job description duties. You will do blank, 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 and blank, right? And many times they can provide a lot of input with, you know, just what's going on. You know, now all of a sudden is, you know, you're not having, you know, a friendly dinner with, you know, little Bobby's, you know, buddy. You're now asking little Bobby's buddy to come over so that you can talk with the mom and just be like, this is what little Bobby's doing with the website. What do you think of this? How's this? Now you're doing market research. You know, now you're getting information on how to run the business. And, you know, you're not bringing him over so that little Bobby has a play date. You're bringing little Bobby's buddy over to get access to mom so that you can ask her questions about real estate, you know. So that's the business purpose behind every single thing that we do. Eventually it should come to the point of like, well, Sean, I hate you. I've never taken a vacation ever again in my life, and I've never done anything fun because I'm always working. Well, yeah, I'm going to work you like a dog, because you are working, you know, like a dog, and we need to write this stuff off. So let's just change how we document it. So with all this is I like having my magic 8 ball, because people are like, well, Sean, what do you think about this? And what's going to hold the future? And just so you know, this is about how smart I am at predicting the future. I'm just as good as the magic 8 ball. But I want you to think about how many trillions of dollars has just been printed by the federal government. This isn't a Republican or Democrat thing. Don't care. Our job as the tax nerd is to figure out how can we abuse this and how can we position ourselves to take advantage of it. So again, opportunity. Whenever there's a tax change, that means something cool is going to happen, and we got to look how to take advantage of the opportunity. So where is all this money going to come down to after it gets fed through the businesses, the unemployed, all of the COVID stuff that's going on? What do you think is going to happen to the prices of real estate? What's that going to do to your commissions? Move it up. All right. So you guys probably actually have a big tailwind over the next couple of years. And the way that the agents that I talk to say is you always look at who is the buyer. And if we have cash buyers, we're not near the end of the cycle. If you have the 20% downers, you're not at the end of the cycle. You have the FHA buyers, you're at the end of the cycle and start being a little nervous. So take a look at who you're servicing. But right now, my understanding in the market is just like it is a seller's market, like all get out. So if you get the listing to sell, you're going to get a commission, you're going to have a bidding war. And as long as it's priced halfway decent, it's like, man, it's going to go quick. So it's like you got a lot of money making opportunity right now. And we have money that's coming in from, say, like the Bay Area. And yes, there are people that are moving out of state because they're not happy with the California taxation. They're always going to be unhappy with the California taxation. It never changes. But the weather here is absolutely amazing, and beautiful. All we're saying is just that there's an opportunity to make a lot of money in real estate. And because there's so much demand and there isn't enough supply, that causes prices to go up. There's money that's looking for a home. There's cheap interest rates that are there. All of these things are basically leading towards prices are going to go up. There isn't enough housing available for the folks. That's going to put rent pressure increasing. So you are in a wonderful position to take advantage of this. Or you can also see where the people are moving to and basically do out-of-state investing into the areas where the folks that are moving to, and you can take advantage of properties over there. And then you have, as
So
things
Sean,
back up. Yep, go ahead, George.
Since you brought out the 8 ball, right?
Yeah.
Every real estate agent has this concern or question, when should I transition from being a sole proprietor to be an Escort? Do you consult your magic 8 ball, or is there some type of strategy or timing that, alerts you on when to make that transition?
Usually the default answer that I'm going to have over there is if you are netting more than, say, $60,000 a year after expenses, then you should most likely be looking over at incorporating. If your spouse makes a W-2 or a significant income, that number should probably be much lower and it should occur much sooner. If you have a lot of kids that are under the age of 17, the number may be a little bit higher and it may be a little bit later. So it depends. But lazy, default numbers. You've been in the industry 2 years because we don't want to incur a cost first, just to save some bucks, because you can tax deduct yourself into bankruptcy court, but you're still in bankruptcy court. So we want to make smart business decisions first. And we want to save as much money as possible. So if I'm going to expend money on the incorporation fee, the $800 minimum tax over to California, the payroll, the accounting, the more logistic stuff that I need to do with the corporation, I want to make sure that it's like I'm really doing this long term and I'm consistently saving more than the cost. But for our folks that have, a little bit of a track record, we typically, and most CPAs, are going to be free for the remainder of your life, because every year you're going to save more in taxes than what it costs to have the stuff done. And you're less likely to get a visit from Uncle Sam about what's going on. So the S corporation is definitely something to really take a look at it. It doesn't change whether you can deduct something or not deduct something. But do understand that corporations require you to have an annual meeting of the shareholders. And I know many folks that they require their shareholders to go to Hawaii to have their annual meeting and to discuss what's going on. And so, if you're a shareholder and you're a director of that company, just be aware of, they may upend you and force you to go to Hawaii once a year. But make sure you document those meeting minutes, because you don't want you to fire you. So, keep track of those things. So that help answer it, George? Or Sean,
absolutely. Now I am extremely excited about the Hawaii plan.
Right on.
I'm sure everybody else in the audience is excited about that as well.
Okay. All right. Perfect. But now we've got hey, questions. I'm trying to still keep this on a little bit of a time frame that they have. So what kind of questions do we have over in the chat feature? Or did I put everybody to sleep, or is everybody just absolutely blown away and they didn't realize that they could ask, questions? So again, remember, you got a $300 an hour guy that's doing this for free. So I'm putting money in your pocket. And most of you are actually not paying attention to me because you're already filling out your PPP application or your unemployment application, or you've just set up a solo 401k, or you've just put your kids on payroll already. So those of you that haven't figured out a way that I've put money in your pocket yet, what's the question that I can do to make you win?
I think the questions are streaming in. I think you've been addressing them as we're going along. But the first thing is, they want to know how to get a hold of us. And so, of course, since I am Sean 2.0, at the end of the meeting, so basically I handle all client interface. Sean is still here. We work together. And so at the end of the presentation, we would share my information. You can contact me, contact the office. We're happy to have a sit down and tailor fit, basically some of the strategies that Sean said. We're just giving the generalities here, but we want to take the time. Strategy is only important if it helps you meet your goals, and that's what we're here for. So feel free to reach out. We want to talk. We want to get to know you a little bit better. Here we are with another question. I think it has to do with, I've already filed my extension. I don't have my Schedule C done. So basically 2020 is on extension. What do they have to do as far as the PPP goes if they're still wanting to move forward with the application, Sean?
What we've done for a few is we've just uploaded, we've had them upload when they fill out the application. They upload the 1099 instead of a Schedule C. But it's also, you can do a temporary Schedule C for submitting the application. All right, it doesn't have to be the one that's filed. They prefer it's the one that's filed, but it doesn't have to be filed. So when they reintroduce the next round of PPP, or that you could go back to the PPP for those who didn't claim it before, we were giving folks drafts of their Schedule Cs, and they were uploading those over to the banks. So at the time of application, this is what you think happened. This is what it looks like. This has occurred. Is different than here's what happens when you're asking for the forgiveness. Most folks are wanting everything to be perfect at the beginning. A draft Schedule C and your 1099 should give you your gross income number. That's going to be sufficient for what you want to have if there's no employees. But because this deadline is 5/31 and funds are running out, don't wait for it to be perfect. Get the application started, do the 1099, and then have the bank say if they need more. And if so, then give them a draft of the Schedule C. Best guess, best application, hey, just get it in there, it gets it started, and get approved for the funds as quickly as possible. Now, one of the things that many folks will ask, this may be a question or not, but I think every agent has a phone, and they also usually ask, it's like, well, how do I write off my automobile mileage? We love an app that's called Mile IQ. It runs as a background app. You swipe right for business, left for personal. And one of the other things that we like doing with the phone is, let's say you get one of these evil things called a receipt. You just take a picture of it, and if you have a secondary email address, like receipts at whatever your domain name is, then just email all of the receipts to yourself, and then you can throw it away. But now you've got a documented record. And so this just happens to be, hey, my Realty One receipt for the flowers that I used for the presentation today, and I snapped a picture, put it aside. Yes, I've got a credit card receipt for it, but it takes 3 seconds to do. But now I've got a file that's documented so that if the IRS ever comes back and audits me, I got all the receipts, but I'm not trying to turn you guys into accountants. All right, you make a ton more money being real estate agents than you do being accountants. So if you don't have a bookkeeper and you're making more than $100,000, you probably should get a bookkeeper. If you don't have an assistant and you're making more than $100,000, you should probably get a virtual assistant. Because if you're not in front of a person that will buy, sell, list, refer, then it's really a function that somebody else should be doing. And those are your high value activities. And that's what business and what the tax code really encourages you to do, is to be most efficient with your time. And they will give you a tax break. So for you self-employed folks, they're picking up about 50 cents of every dollar that you spend as a tax break to make you more effective at your business. That's the power of a tax deduction. I mean, that's cool, man. We want you as efficient as humanly possible. All right, so George, what's the next question? Are we?
Yeah, so PPP is still a hit. So one of the questions is, do I have to have income to apply for the PPP? And also, how is that different from application wise? How's that different from the EIDL?
Okay. The EIDL is a loan that you have to pay back. The PPP you can get forgiven, so you never have to pay it back. That's the big difference between those two. All right. So I hate saying it this way, but it's the easiest way I can explain it. I like people paying me. All right. And I like getting paid, and especially to do things I want. I don't like paying people. So I don't want to owe money if I don't have to. But if I get cheap money when I don't need money, that's what business owners do. Because when you need money, you can't get money because nobody's going to lend to you. So the EIDL is, again, it's based on hardship. And so what was the impact to the business? So you have to show loss or impact or why you need the loan. It's a little bit more difficult to get. Our real estate rental folks were able to get the EIDL loans, but not PPP funds. So the folks that were landlords, we were oftentimes just telling them, well, take your rent, multiply it by 12, and just say that's the potential loss that you have. You know, we're taking best stabs at what the impact was going to be. But because you have to repay it, the government's kind of being okay, you know, with how you're coming up with the calculations. For the no income PPP folks and those that were not in business before that February 15th date of 2020, your best bet is probably going to be to go over to the unemployment and fill out the application over to there, you know, for that PUA assistant. But if you were available beforehand, you know, you were in business before February 15th, 2020, and you made it through all of 2020, you know, with no income, unfortunately, the PPP calculation is going to say, you know, we can't pay you anything because you didn't lose it. So when they made that change to have it be based on gross income, that was like the really big life preserver that they threw out to the small business owners. Because before, most of them, they don't have employees, they don't have other stuff, they're just grinding. They may make 60, 70, 80, $100,000, but after expenses, they've only got like 30, 40, $50,000 at the end of the day. So that's why that gross income became a big boon for most of the self-employed. And that wasn't eligible before. And so if you previously applied for PPP and you used your net number versus the gross number, unfortunately, you can't amend that PPP application. But if you haven't, now you're allowed to use that gross number.
And then, so Sean, you know, knowing that there's so many things out there to apply for, the PUA, unemployment, PPP, EIDL, you know, the acronyms go on and on and on and on and on. And so, you know, how do you strategically pursue all these benefits? You know, how would you approach it?
Well, first is PPP because it's the most time sensitive, in my opinion. If the PPP doesn't work, then your next step is going to be the EIDL. Well, let me rephrase that. If the PPP doesn't work, regardless of whether it works or not, then I would go to the EIDL. Then after the EIDL, I would go over to the PUA and the unemployment. And the application over for these things is way, way simpler than you think. So I hand walked a client through the PPP that was a self-employed person earlier this year. The first day, it took us 30 minutes to do the application. That was hand holding, and we were overthinking the questions with them. That night, they received notification. The next day, they approved a document, and the day after that, the money hit their bank account. So 30 minutes and they got $28,000. All right. So, hey man, I'm trying to make you make 300 bucks in an hour, but like 28,000 bucks in a half hour. Look, I bet you all of you are really smart enough to figure out how to make that kind of money that quick, and it's worth that kind of venue. Now that person's business was doing about $120,000 worth of gross revenue, to give you a reference point or expectation of what to look for. So, you know, many of you are really intelligent, really smart folks, because it's like, just think of like the contracts that you write for your clients and the closing paperwork and the detail that's into that. It's really the exact same thing. It's just a different looking form that you're not used to. But they're only looking for about 3 or 4 documents, and it's pretty self-explanatory. It's easier than you think, but for that kind of funds, it's worth digging into. And many of you, because of where you bank, you don't realize that your banker is willing to sit down with you and help you out through the process and walk you through it and hold your hand as a nice convenience. But most of you just don't even ask them to look at it or do those. So then the EIDL. The EIDL is even more ridiculously simple. Literally had a client who's a real estate guy that owns a bunch of rental properties. Walked through the application. He goes, "This thing took me 15 minutes." He goes, "The next day, he's like, I got $100,000." He's like, "I cannot believe how easy this process and this application is." The government is wanting the money into the hands of those that know how to allocate and invest capital to stimulate the economy. So they're basically encouraging you to do things that are smart for your wealth creation in the business. All right, because this is how we're going to really help it. After the Eidl, now go over to the PUA. That one's probably going to take a little bit longer, and do not try to call the EDD. You're going to be on hold for 9 years. You're never going to get in touch with anybody, but just give it a go. Hey, the next time when the office is fully back open and you're having like the coffee with each other, one of you has already done this and can kind of like be the role model for the others. Just understand that many of you are not saying that you're doing this because you feel a little guilty, or you may or may not feel guilty, but you have a mentor or a role model that's already walked you through this. It's not as difficult as you think. We are going to send a link that was based on the websites. We're going to send them over to Bonnie so that she can send them over to you. You guys can take a look at it. So we're taking some of the heavy lifting off of you. But obviously you've got to fill out your own PUA application and your own understanding, with it. But it's probably hour would be my guess. And then it's not going to happen right away. It's probably going to be like 4 to 6 weeks before you really kind of see anything. So just understand that there's going to be that, time delay before you really see any payment over onto that PUA. And you can still make money. The requirements under unemployment are way different than they were pre-pandemic requirements for the unemployment and what you needed to be doing. Then after that, of course, you're always going to be looking at tax deductions along the way to minimize the tax bill, and always be writing off everything under the sun. But because, this is, Realty One, a group, and Bonnie's putting this together, look, go sell more stuff, get stuff in contract, make more money, because none of this works if you're not making money. And it's like, we just need to make more money, because I literally, I don't know your market well enough, but the way that I'm seeing it over from the clients is that whoever is getting the listing is making a lot of money. So make sure internally you're talking with each other, not saying it's a pocket listing, but man, you guys probably have buyers. So this is what a seller's market feels like. Just remember, in a few years, it's going to be that buyer's market. And understand it's just a cycle. And the cool thing about being an agent is you make money in every single part of the real estate cycle. So build the cycle, make money on it, plan for the next stage of it, take advantage of it as much as possible. Use those communications with your fellow agents, in the office, to really service your clients the best way that you humanly can, because you guys care about making somebody's house a home. And that's a cool thing, because it's like you've now taken their dreams and made them reality. It's still the American dream. And that's what you guys do every single day. And what a cool job. And you get paid well for it. So go sell stuff. All right. So George, what else we got?
We've got a couple more here. I'm not sure what to make of this. A lot of people want to put their kids to work.
I know, man. It's like, my parents are just slave drivers right from the get-go. They're just like, wait a second, I can, yeah, literally. Okay, this is cool. I'm going to say this the wrong way, but all right, let's say you got a little girl. I'm stereotyping this, but let's say you want to pay for her wedding, and let's say she's 10, so she hasn't met Mr. Right yet, but you're paying her, say, $6,000 a year, and you're putting $6,000 into a Roth IRA. The statement comes to the house, so she doesn't even see it. 10 years go by, she's 20, you got 60,000 set aside. 5 years, she goes through college. You still have that 60K original investment. And let's say it's grown to like 200 grand. She now gets married and she goes, I want to have my dream wedding. Look, you got $60,000 that's set aside, but because you paid her through payroll along the way, you got a deduction for that 60 grand. So the government picked up 30,000 of that tab. So it really only cost you, by using tax strategy and planning, 30K to pay for your daughter's wedding into the future. And she still has like a couple $100 grand for her future. I mean, so, let's just say, yeah, put them to work.
But Sean, also, they want to know, if they're putting them to work, do they also have to worry about filing their taxes? If, say, they pay them under $12,000, do they have to worry about that?
Well, technically, they're not, if they're below the filing threshold. So they have no income tax filing requirement when they make $12,000 or less. We usually recommend that you file it just to create a statute of limitations running. So then that way the government won't come back and take a look at it. Now, because I'm the guy who gets caught for everything. So when my oldest son was 2, I put him on payroll, and case law says he's got to be 7. So the IRS and the Social Security Administration said, Sean, what the heck's going on here? What did you do? And I took a video of my child eating chicken nuggets because I created an analogy story of this is how the banking system is, and this is what a mom would never do to her child. Now, luckily, my son got the take on the first try. And according to the Screen Actors Guild, is I had to pay a minimum of a 2-hour sitting fee, and I had to pay him and a parent to supervise the transaction. The going rate was $350 an hour, and I documented this. So I paid my child $700, as a wage for this video that I shot that I used in the business, teaching people how the banking system actually works. And the Social Security Administration and the IRS said, "What the heck?" I showed them the video, and they're like, "Cool, rubber stamp, go." All right, so you got to document the purpose, and you got to show what it's for, and you can be creative, but the general default is they got to be 7. So statute of limitations, file a return under 12K. There's really no filing requirement whatsoever. Ideally, if you can fund the Roth 401Ks, the Roth IRA for the kids, great future, but take care of yourself before you take care of the kids. But for those, parents that, feel super guilty about their kids, hey man, this is a great way of getting a tax deduction and saving for the family for the future to really accomplish, your educational goals and the dreams for your family. And really, that's the name of the game. And it's the tax law is set up to encourage certain behaviors. And if you do them, then you get taxed less. If you don't do them, they tax the bejesus out of you. And so it's your choice as to which way you want to follow the law, but it's still just the law. And whether you dot your I's and cross your T's and pay a lot less in taxes or pay more is your choice.
Sean, can you field one more question,
Sure.
if that's okay?
Yeah, one more and then we're gonna wrap it up.
Okay, Bonnie. So this is a little bit of a loaded question, but give the best general answer as you can. It has to do with the entity type. So proprietor, S corporation, LLCs. Truly, there's still questions about what's the best fit. How do you make that call? And also in light of, the AB5 rules of independent contractors and things, I know it's a loaded question with the, legal tilt to it, but, give it your, summary as far as how to approach that.
Yeah, schedule an appointment. There's the easiest one. So I'm gonna wrap it up because it's like I got Bonnie on here, so she's like speeding along. All right, so
I just want to be respectful of your time, and I in the hours. So
yeah, so here's the 30-second wrap up. So knowledge isn't power until it's applied. So you guys need to do something with this presentation if you really want to value my time or make me feel appreciated that you listened. This is what I want you to do. I want you to find one thing that you're going to do, just one. And if you apply that one item over to it, you're going to make more than $300 an hour. But I need you to take action on something that you learned, today. If you don't know what it is that you're going to do, and I was at least decent or better, I want you to send a thank you note over to Bonnie, because she's the one who put this together, because she cares about you and she wanted to do this in a fun way, a little entertaining way. And hopefully I did that for her while still barfing a whole bunch of information on you really, really quick. So send her a thank you note. And if you send her a thank you note, hey, she's going to take any questions that we didn't answer, and George and I are going to create a follow-up video answering those questions in a little bit more detail where we aren't time pressured. And then she's also going to provide you, if you want, I've got a PDF book that I created that's 57 ways to grow your business. And then we also have an internal PDF that we call a little white paper, which is how to have deeper conversations with your clients about money. And this could be a great exercise that you could do for yourself to understand. It's like, hey, what makes you tick when it comes to money, and how are you using money to get the most value out of your life? And that you're making your money follow the values you want to have to live the life that you dream. So if those are helpful for you, they're a tool. But really, I want the communication to go through Bonnie here, because it's like she needs to know whether it was good or bad and what we could do differently, because this is how she becomes a rock star to help you guys make more money and succeed even more in your career. Now, she'll give me the feedback and she'll criticize me, so she's going to be kind and gentle. But I appreciate your attention, even though I didn't get to see you guys. I still think of you as family. Go sell some homes, make a buttload of money, be ridiculously successful, because that's how you help your family, the community, and others. Your success is the inspiration that's making everything better. So go crush it.
And if 5 seconds here, Bonnie, for me, if you want to schedule an appointment, as Sean has said, these are complicated questions that we really have to dive into your situation. You're going to have my contact information reach out to our office. I would love to have a laughter with you, and the laughter is real. And so reach out and we'll be glad to connect and help your family out.
Do we have a phone number that we can throw out to everybody?
Absolutely. 916-932-2030. Sean, did I get that right? Yes, that's the number.
Right.
Well,
No,
let's
that's
call
not
it-
Sean, that's mine.
George,
Yes.
George's number.
So
Right.
say that again, 916.
916-932-2030. And just ask for me. And
George.
you have to go through some Pentagon
George.
protocols.
George.
Yes.
George.
George. It's George, aka Sean 2.0.
Mhm.
We'll all know who AKA Sean 2.0 is.
Absolutely, absolutely. You can say it on the street. Everybody knows who it is.
That's You guys have been so amazing. I am telling you, this has been so informative in such a fun way. And you made it super easy for us novices to understand the tax regulations and rules and everything that seemingly is boring. You guys made it a blast. And I just thank you so much for being here. This was such an honor to be in your presence and to learn from you. So I appreciate your time. I appreciate you just donating your time, both of you, for this and for our agent success. You guys are amazing. So everybody just give them a round of applause. I hear the clapping everywhere.
Now
You
I
guys
have
are
my rock
awesome.
star moment.
Yeah. You guys are awesome. Thank you so much. We've gone 4 minutes over your time, and I just really appreciate you guys. Thank you so much. And the chats are coming in. Everybody, thank you. This was great. So you guys are awesome. Thank you so much for your time.
You're welcome. You're welcome.
All righty.
Thank you.
Give them a call, everybody. You have more questions, give them a call. You have your taxes to do, call them. This is going to save you money in your pocketbooks. So enjoy. Have a fabulous rest of your day, everybody. I appreciate you being here. Bye-bye now.
Bye, Bonnie.
Bye, guys. Thank you so much.